Hello, welcome to another video of AES Futures Trading. Today is Friday, June 9. It is 5:50, 5:24. The market has already closed, and I wanna do as usual a replay of what happened today in this market, in the ES market, in the futures market. What I have here is the overnight of today. This is yesterday. Yesterday was coming, or we were coming, or the market was coming from a really weak, we, uh, from a day that has a really weak buying. Now the market opened, took this area. If you have seen the previous video, or my previous video, you will see the market took this low, but it wasn't able to take overnight high, my bad, overnight low, and it didn't get closer to the gap. Having, when I did the replay, I guess the market was somewhere in this area, if I remember well. I was having, the market was having like 1, 2, 3, 4, 5, 6, something like that, 5 or 6 lows that were coming from a very mechanical level, having also the overnight high exactly at half back. Now that would that this piece of information, a bunch of lows here, the second distribution, a distribution being formed here, kind of like I was leaning towards the lower side here, just because just because this low here, right? I was neutral, but a little bit to the short side, but having in mind that if the market cannot close these distributions from yesterday, these highs were in danger here. And why I say this high were having good also been taken out, because there's a lot bunch of stops here. You know, there's a bunch of stops above here, above this, and these three are close to each other. The structure of the market remained weak. Um, my main piece of information was this, right? Now I have I have this high, this high as important references. This low as well. We got uh, yesterday's high back as a weak low. This is a second. This is also the base. Notice what is this? This is high back plus lower upper distribution low, right? And which is poor actually. And this market and the overnight actually took the overnight high out. Not just that, before the opening. Um, Not just took the high of yesterday's out, but it made, it gapped to the upside and put these highs really close, put these highs on the side. Remember, in the upper side, well, what I'm going to do. I have some other references here. In the upper side, we have August high at 43.47. This is from a previous contract, but this is what was going to be relevant is the next thing. that I'm going to show. All right. August high actually is 43.27.5. Well, just looking here in high, 43.27.5. 43.27.5. Unfortunately, I erased some references. At this time, I have erased some references. Oh no, it is here. A16 high. I have missed this even though I do all my homework, I missed this level here. It is in plain sight. Um, because I was focused in this high up here, not in this one. Even though I do my homework, all right? Now, overnight inventory now is short. I'm going to check Thursday. Sellers 4298.75. Sell 4298. That's sell. And last is same. Notice how the bulk of the trade is below sell. This is short. All the overnight trade is short. There's some rebalancing here that is in progress, but most of the shorts could still be here in this market. I mentioned that because the counteraction to the overnight inventory this is a quite popular trade, right? The counteraction actually is a rally to remove all the shorts. What do you do? What do you do to remove the shorts? There's a rally, right? You remove shorts with a rally. Now let's check now what happened. What is going to happen here? As usual, I'm going to start at normal speed and then I'm going to keep going higher and higher. All right. The overnight is getting closer and closer to this high, and there is no, there is a gap, my bad. There's a gap here. Okay, just pay attention to that. I'm going to wait to the opening, for the opening, and regular speed here. 2 minutes before the opening. Market is hovering above the 4300, and notice how the 4300 also has been taken. This high, yesterday's high, is right at the 4300. Right, there's excess. We have excess here, excess here, excess here. I wasn't impressed by this excess a couple of days ago. Let's see what the market does now. All right. Look at what happened in this opening here. The market opened here and just make a big, a big jump to the upside, right? It makes no attempt to go in the direction of the overnight inventory here. No whatsoever. Right? The market is going to be like this for a moment. Now, what I want to see is what the market does with the gap. This high has been corrected. This high also has been corrected. And this now is gap closed. Notice where the market is now. Let's come back to the opening, right? This is gap closed. This is gap high. Let's observe this, what happens with this market here. Um, just just observe what happened with this market. There's going to be a lot of trade here. Upside continues. There's nothing here on the upper side. At this moment, I start to watch volume. I have noticed the volume was going to be, no, first was going to be high. It was, oh, what is this? Oh, I guess I'm doing the right one. The wrong. This is the one I'm using. I apologize for the breaks I'm having. I'm just having too many distractions here. Okay, I am going, just check the market and feel the market. Now, did you see what happened when the market tried to take the opening back? Right? The market even couldn't take the low of the day. This is location what you have here. Right? This is location. I was so focused on this side and having a bias also to the downside towards this gap. Right? But that changed, and we have to be able to adapt quick to what the market is doing because the market doesn't know what I want to happen. The structure of the market is super weak. It remains weak, and but the momentum is to the upside. How long the momentum can I mean how much the momentum can take the market higher? Nobody knows that. At this moment in time, when this happened, all these stops from yesterday, this day, and these days pretty much are up. There was a lot of talk. There was a lot of talk about that this is a new bull market, that the bear market is over, so everything is roses now. Right? Um, this actually is a trade if you can take it. It's really hard for me. This, I mean, we have to be able, we have to be able to take these trades, right? Taking this is a breakout. Um, the trade average, the market shows its hand when it cannot close the distributions. It cannot close the gap. It has some volume, but it cannot close the gap. That's actually one of the most profitable trades that are there because you have location here. One, because you have location, the market tries to close the gap, sellers are, absent here. You don't see any kind of selling, and the market just keeps going high. Now, from here on, for the market to come to this reference here, remember I was focusing on another one, but this is August high. You should have made when you did your homework, when you do homework, you will see this month, you will see August high here. It is here, 27.25. The weekly also has the same reference here. What about the daily? You know, that's the only one that is out there. And this is a breakout. This looks like a P shape. It looks like a P, which is a sign of short covering. To go higher, the market will need volume, more volume. Now, many many traders fail here because just because I see that there is short covering here, it doesn't mean the market is going to break, right? Momentum, as I say, can take the market really long distances. And now, what I was watching also is this period. This is I mean, there's no volume here. It is true that there's some the volume is accumulated here in the lower side, but not close to 10K, which is my proxy, right? So this is okay. Okay, should I go with this? No, yeah, I got my doubts. I got my doubts here. Now, okay, this was one opportunity here, failing to close the gap and going with the counteraction of the overnight inventory. No, I want to go to from here on. Everything is just pure. I'm going to go to 30 here. I want to make it. This is the market going 30 times faster here than regular speed. Okay. Notice the accumulation of volume. Do you see any reds there, up there? Not just red. What I'm observing, good volume would be 10,000 and more. We got excess on B. B has excess. Okay, upside continuation. Let's see if the market can take August high. Usually, when market has those kind of levels, relevant levels, the first time the market goes over there, you will find some reaction, some selling or some buying, depending on the case. Right, market is going down, you will see some buying the first time. Now, I was thinking here, guys, this is Friday. Rate decisions is next Wednesday, I believe. Right, that's what I check. Interest, no interest rate. FOMC is Wednesday. Um, inflation on Tuesday. Yeah, core inflation on Tuesday. So there will be some hedging here, and not just that. I guess the next week also, it is the new contract will start trading heavily. Notice that notice that low here, where this low comes to. You know, this low is exactly half back here. We got the excess on the upper side, very close to the 43.27, which is August high, but the market couldn't take it. Now, the trend to the upside has ended here because C low has ended the trend. Now, this part here, in what we have here at this moment, there was a liquidation on C. It was C? No, it wasn't C, it was D. But we have the market has the liquidation of the longs. C was a sign, no? C was a red flag there. You know what? I know I'm not going to the outside. They could ending one time frame lower early in the more in the session advertise a rotational market. A rotational market is a market going higher, going lower. Now, the next thing I want to see here is, can the market go back inside previous range, inside the 4-day range that we have? Or can the market take August high? Can the market start a new action? They also were sideways trading here. Now I was thinking what's happening with value. POC is exactly half back here. Um, but that, but you have seen right now, that's long liquidation. All of the loans from A, B, and C, boom. That's the fuel the market uses to go lower. How low? How low can it go? Well, at this moment in time, market re-enter this 5-day range, not just the 5-day range, but also close the gap. So this is not a reference anymore. This is not a reference anymore. Close the gap and get inside previous day range. Getting back inside previous day range targets this distributional low. All right, that is the low of the day, but first you will need to take this one out. Can the market do that? In the way, or as a next reference, to monitor for downside continuation, we have value at a high, the settle, halfback, overnight POC. What's going to happen? What's happening? Market has been bought from seller. This is not a good level. It's not a good reference to go long here. You are just risking you are risking too much here. Now, can I go short? I wouldn't go short here either at this moment in time. Maybe I was, maybe if I did something up here, right? When the market, when C took B low, D couldn't take C high, that's when you start doing something. This is the second opportunity here, right? First is when the market tries to close the gap and fails, and then when this liquidation starts. We could be here or we could be down here as well. More risk down here. Now, I want the market to take overnight hard back, overnight position. Notice where it stops here. I was thinking, God, here, don't tell me that this market is going to go higher or is going to rotate having that low exactly at overnight hard back. If the market is going, because what is happening here, why I don't like the short either here, because value is higher. Value is higher, right? When you have value higher, the trade is buy the breaks and sell the rallies. But how are you going to buy here? When the market has closed the gap, when the market re-enters previous day's distribution, upper distribution. That's a high risk trade there. High risk trade. Inside bar forming. Can it be an inside bar? When D broke here, I thought was this market was too short here. It was getting too short at this moment. Now, my gosh, I have at this what I was thinking here at this moment. I was, trades were short in this market. That now there won't be won't have the ability to adjust, to have the mental uh, uh, ability to adjust, to make the adjustment and go with the break. But notice how the highs, G high is sold from yesterday's, it's been sold from yesterday's high. It comes out of the range. A weak market doesn't come out of the range. That's a red flag there. Another thing, H is taking G high. In the same way how C ends or marks the culmination, mark the ends of the upside action, of the action to the upside, H taking G high marks the culmination, the cessation, the action to the downside. There is no more one time frame lower here. So the odds of rotation are high at this moment in time, meaning the market can go higher and can go. And at this moment in time as well, I have started to see or to notice that there is these big blocks here. Why somebody would want me to see these big blocks of volume here, up here and up here? And notice where this is, 4300. After this break, market has a really fast break here. Boom, this volume appears here, just like that. Boom, another one came up here, big one. This hold it, and this prevented the break, and this prevented the rally. Oh, okay. I said this is just a rotation here. I didn't do nothing here after those volumes that I saw. The movement was over there. As it's Friday, summer is starting. It's about to start. Summer markets are theme markets, right? And there is more short-term trading that happens, or the short-term traders have more kind of tend to have more control of the market. Now, notice I and J high here, you know, non-excess high, non-excess low. So, I mean, why would you go short here in this market if you have this? Why would you go long if you have this? There's high risk in this market. High risk. Everything we do in trading is about risk. It's about risk. You could have go short here when this market takes this high out. Okay, or when this market takes this high out and comes back inside here, that could have been a short. But what is your exit? How do you know the market is wrong? Right? Let's mark this one. we have this level here. We have this level here, right? This is yesterday's high. The market opened up here, and I say, okay, I'm going to go short here as soon as the market comes back. The market came back down here, but it did not have continuation. I'm not going to wait that the market is way up here to close my position. So my exit is, if this one doesn't work, it should I should get out, you know, instantly here. That's the question. If I had gone short, the next question is, or before doing that, why I would like to be short in a market that has a gap to the upside. The trade, when I have a gap to the upside, is going in the direction of the gap. How do I enter is the question, right? This level, now market coming back to check this level, this is an entry here. What is your exit if the market comes back to towards this level or the market closes the gap? A warning size market gets back inside its 5-day range, and definitely I am wrong when the market comes back and closes the gap. If the gap is not closed, there's still some potential to the upside. You know, the market can close the gap and rally and then come back and break. So that's not it wasn't my trade. You know, I tried to do that, but it just wasn't. The second time it comes, the risk is higher. Could be higher. I I am to say it is higher. I have to have in mind a lot of considerations. I have to have context to say anything here. When I say one thing, it is based on what is happening and that specific moment in time. Those observations or that conclusion could be completely, you know, irrational or crazy for another situation. That's why I think the market is these trading strategies don't work because you assume the markets can be predictable. The markets are not predictable. Nobody can predict the market. Nobody can predict the market. Okay? We have to understand that we deal with uncertainty and the business is in uncertainty. When the market cannot take this level here, first of all, did you know that this level was here? Did you do homework and put this level in your charts? Okay, this is one thing, right? You want to go long here? Okay, I'm going to go long when the market takes this high, this level. Okay, if the market comes back and takes this level back, that's my out. That's my trade. My trade is not working, for example, right? But why would you do that? Why I would like to be long? You got a reason to go long. You make your reasoning, you check inventories, you check tempo. If the market is going strong, with conviction to the upside, it is a hard trade. I was thinking, how do I go? How do I take the long? What's my entry here? What's my entry? Where? What the market needs to do to tell me that I am wrong? Now, when the market makes J high here, double highs, double lows, that's the end of everything here. There's nothing here, nothing else in this market, nothing else. It's just a rotation here. One time frame higher ended here, one time frame lower ended here, another action to the outside ends here, it starts here and ends here. It has a really weak base. Downside action is in progress. POC is being moved lower, and just short-term trading here at this moment in time. Notice where K is coming from, hard back. that K high has low also being or staying there now. Okay, L has taken that high. Notice how L takes K high, K low as well. Can you see? There's nothing here in this market now. If you have been trading here, probably you will be whipped. So another thing, the market is in balance. The market is higher. Notice how value is here, value is higher. And the market right now, at this moment in time, is at the center of the range. At the center of the range. Again, what are the odds here? The market will go higher. 50%. I don't like those odds. All right. So that was it. It's a kind of really fast um, replay. And notice how we have volume increasingly higher and it start to decrease. The later the volume starts to decrease. It's still higher, but it's decreasing, and the volume ends actually lower, lower than yesterday. Very subtle, and the volume is lower. What the market is doing is going to the upside. Is volume behind? No, because volume is lower. You can see it here. We can see it here. Yesterday was very low relative to the previous day, and now it's again lower. All right. Now for Monday, what do we have for Monday? All right. Very quick. The market is having a breakout. I would pay attention, special attention to this level here. May high 42.40. If the market re-enters this range, it could trade towards the 40.62. But the next reference in the upper side is 43.27. There's a lot of talk on the street now. Oh, this is a bull market. This and that. This or that. Breakout on the weekly. We have this 9-week, 8-week range. Upside breakout. It is having upside continuation. It almost reached the high. Notice where this high is. Right there. The market has been sold from August high. Kind of like a weekly reference as well, right? But it is kind of far. You know, remember this is a weekly time frame. The next time the market comes back and check this high, it could be a while. It could be a while the next time this comes. I'm not saying the market is going to break, but it could be a while. Notice how there's some weakness here in the lower side. Also, the market can take this on Sunday. Oh, so nobody knows what's going to happen here. The higher this market goes, the higher this market goes, the higher the odds it will keep going higher. What I think could happen, what can happen is there's a lot of money on the sidelines. If they see the market going higher, they are starting to feel the pressure now. They could start to feel the pressure now to get in the market, and that can force a directional move. We can have even a higher movement to the upside. Uh, I will keep a special eye on that. Now the daily, still the same reference on the upper side. And it's having a breakout of this. We have this P, this range here. This looks like a short covering to me because 1, 2, 3, 4, 5 days range, and it's having an upside breakout. It's very subtle here what happened. We have an excess here on the upper side, but the market closed above outside of the range. They opened here, trade a little bit lower, in the daily, and but it closed outside. It closed on the upper side, above the upper side of this range. I that's something that catches my attention. Okay, the structure is super weak. Gap here. There is thin markets here, very thin markets. Potential for firecracker effect, mechanical buying, another gap, another mechanical buying here, weak and poor low at the same time, another gap here, um, mechanical buying, mechanical buying. But the momentum is to the upside. There's nothing else to say. Momentum is to the upside. Now, market profile. What the market profile has. Notice how this low has no excess here. No excess here, and where was bought from? Overnight POC. Very mechanical low, very mechanical low, very weak low. Notice where the overnight low is as well. Overnight low is previous this previous day distribution high, low. Exactly there. What do we have below this? What happened here in this day when the market has no excess? Remember, the market has no excess, and the market took this low out. The same thing can happen with this low here. No? And especially because this low also is a non-excess low here, intraday. Okay, remember that the nuances are very low. The contract is about to expire in 1 week. Little excess here, non-excess down here. This is long liquidation here. I haven't seen a oh no, this is short covering here. This you see, yeah, you got short covering here. You got the steam on the P and the P, but kind of like elongated. This one looks more like a long liquidation than this one looks like a short covering. All right. I guess the next week is going to bring some volatility. We have, as I say, we have next week, we have core inflation, GDP, PPI on Wednesday, FOMC on Wednesday as well, and we have a Fed press conference. I assume that's Jerome Powell, chairman, Fed chairman speaking there, and consumer sentiment on Friday. Stocks earning session is up for all purposes, all practical purposes over, and I guess the market is going to be more focused on what the market does with this rally, this AI rally that's going on, and all this craziness and all this excitement that is out there about AI, and also that the big market is over, right? The big market. As soon as the market crosses the 20% range, there's above 20% gain, 20% gains, then that's the end of a bull market. Okay, but this is just normal. There's a lot of talk on that. That creates a lot of excitement. I would um I will pay at what I will do next week. Next week I will pay a special attention to what the market does with this low. This has good also been taken out, and also this one over here. No, if the market can close the distribution here, closing the distribution targets the low, the opposite side of the range, which actually is this one. And notice what we have below. We have nothing here below this range. The upper side August high was almost taken here. As it has failed to take August high. But there's still many pieces of information, contradicting pieces of information there. That actually the volume, overall volume is low. The market has low volume. I wouldn't be so confident and just be very cautious there, and trade, evaluate your risk when trading. Risk is everything. Risk management is everything in this market. I notice how when I start, as I said, when I start to see this amount of volumes, big blocks coming here, and also after the close, I suspect the market. I say I don't want to do nothing because this volume came with no volume actually. We have third, for example, here 1400. Right? What is this? Is this the notice how much volume here? If this volume was, for example, here, it would be more relevant. Right? Okay, all right, guys. I wish you a good trading day. I wish you have a good weekend. Enjoy your weekend, relax, and try to do something to distract yourself from trading, and so you can have your battery is fully recharged for next week. All right. We see you next week. Stay safe. Again, have a wonderful weekend. Bye bye.